And I set things to recording. My puppy is sitting in the window, so I'll tell her to behave and she won't listen to me like the rest of my kids and all of you. I just want to let you know today is March 30th and we're working on chapter 6. I know it's a little bit hard to see, but I've got our objectives there in the background, and a little happy birthday for my daughter. She's 17 today. Pretty excited about it. Pearson was down over the weekend, much longer than they were supposed to be. So I've moved the reading quiz, which once I get set up will be available to you for you to take at any 15-minute window from now until Wednesday. And I'm not sure on the time that I'll do on Wednesday, probably be before class, so it'll probably be 11:55 a.m. So please pay attention to that. That should give you enough time to read the chapter. And also I'll be preparing the coursework, and that will be in in Pearson as well. It'll be similar to our questions, but it'll be a smaller subset. I have the chapter handout in Blackboard, and as we go through, I will post the annotated versions that we do in class. Now, a lot of this is kind of a review of things that we talked about, but there are some new things in the chapter that you're going to be responsible for, and I will do my best to highlight those. If you have any questions, please pop them in the chat now. Hopefully you got the email from me. There's an extra credit opportunity in Pearson that is due on Saturday, and you'll be able to complete that. And as long as you do the whole thing, whatever your score is will replace a homework. So you want to try to do the best that you can. You don't want to do it halfway, because then you'll be replacing essentially something with a lower grade. The classwork will be due on Sunday, assuming we get through chapter 6 by Friday. And again, the questions are going to be very similar to what we go through in the class. In some cases, they'll be the same, just like last week. So your homework grades are not ever put into Blackboard. I will, when I catch up a little bit, put the quizzes over there, but your homework is only going to be kept in Pearson. And at the end, what I'll do is I'll carry those percentages over. During the midterm grades, I just brought your percentages over like I did there, but you should be able to look at your grades in Pearson. If you can't, then, or excuse me, if you don't know how, you can just get on Zoom with me during the office hours, and I'll block off a window so nobody else can access it, and we'll go in and look at yours. All right, so just an FYI, I don't have the ability to enter in all of those grades into Blackboard. So your homework is not going to be in there individually. I'm just going to take the percentage at the end. There were a few people asking about their grades, and I need to calculate them for the athletes. And so I'm just going to set up a template that will help you all calculate your grades as well, so you can input your information. And so you'll have an idea of what your grades are. I'm hoping to have that available Tuesday night, and then we can talk about it on Wednesday during our class time. Somebody asked, is there any way we can see what we did wrong before we do the second try on the classwork? I thought I set it up to where all the correct answers carry forward. So essentially, if you have to redo something, you got that part wrong. Unfortunately, this system's not as flexible as some of the systems. It should provide, it has limited feedback, but it should provide a location where you can go to click for help. If you have something specific, please let me know and I will try to contact Pearson and get a little bit more information. So Christina, hopefully you don't mind me using your name since you posted it to everyone. Send me a screenshot of what you're seeing and maybe I can do something about it. As of right now, it's kind of more structured than I would like. The McGraw-Hill text gives me a little bit better option, but unfortunately we're not using that. Hopefully we'll be getting rid of this older text and move into a new text for the fall. I want to thank all of you for your patience. I want to thank all of you for your continued participation. I definitely appreciate you having you in class, and I want you to know you have any issues, you have any problems, please contact me. I'm not giving anybody a free pass, but I know that this timing is hard on people. I know being home is difficult. I know there are a lot of distractions. So in terms of the due dates, I can't be running them every time on an extension, but if you have something going on, you have an issue, let me know. I'll work out some extensions with you. All right. If there's not any questions, I am going to jump into chapter 6. So, and again, you can either ask me in the chat or you for everybody to see, or you can ask me privately in the chat as well if you click on there. I'll give about 30 seconds there for A, the dog to stop barking, and B, to anybody to ask any questions. Otherwise, we'll jump into chapter 6. Okay. All right. Okay, now hopefully you are seeing the chapter 6 questions. And again, those are available to you. You don't have to pull them up. You can pull them up. If you have any questions, just click on the chat, ask the questions. Don't hesitate to stop me, pop on and say hello. It'd be nice to hear from you guys again. But otherwise, I'm just jumping in. So let's go ahead and talk about sort of what we know. This is about long-term assets. And so we know long-term assets are recorded at historical cost. And historical cost includes the cost of the item, shipping, installation, training, and setup, etc., all if applicable. Historical cost does not include post-installation maintenance or utilities. All right. So when we're trying to figure out what we're including in the price, basically it's everything that we need to get it set up and running. Forget about the utilities and don't include anything that's sort of maintenance unless you have to have it to get the item running. All right, so now in this first part, I've left out some of the basics here. You should look at the chapter because I'm not covering straight line depreciation other than just to give you the formula here. But I've pulled out a lot of those questions because we've talked about it before. So we need to know how to allocate cost to each item in a bulk purchase. All right. We need to know straight line depreciation. And remember that formula would be historical cost. Let me go ahead and throw an equal sign in there. Historical straight line depreciation for 1 year equals historical cost minus your salvage value divided by your useful life. And then just a little note here, remember to adjust depreciation if not a full year, similar to the interest expense. X months divided by 12 months. If necessary. Okay. We also need to know the double declining balance. For 1 year. And this is equal to 2 times the historical, or sorry, the straight line percentage multiplied by the book value. And keep in mind here to reduce the book value by the salvage value. All right, and the last one, mini brain cramp here. We want the, one second, I gotta scroll down, show a little brain cramp on it. The activity method. So essentially we're going to be looking at the units of activity. And this is going to be your historical cost minus your salvage value divided by your total units expected. And then you multiply your actual activity times the cost per unit. So I shouldn't say reduce here. Keep in mind, don't go below the salvage value. Okay. All right, so this first question is asking about allocating cost to a bulk purchase. And you have two types. The first type is that payment is less than the appraised value of the units separately. Example 6.1. The second type is payment is more than appraised value. Of the units separately. And there's no example in a business purchase. The excess would be goodwill. If it is just an asset purchase, it is more complicated, and we'll cover it when it happens, if it does. Some FYIs here. We won't cover mid-year or mid-month convention or the IRS tax depreciation schedule. It's not schedule, it's IRS depreciation. Gosh, my coffee has not kicked in. Method, which is called MAKERS, which is a modified, accelerated cost recovery system. And for most financial reporting, the goal is higher income, whereas for tax reporting, you want to minimize your taxes. So the government wants investment, so they allow a faster depreciation, which reduces the tax liability. If a company uses straight line for financials and MAKERS for tax purposes, then they will create a deferred tax asset. So you've probably seen that before. And what it essentially is that initially the government wants to incentivize companies to invest in capital goods in the United States. Now it has pluses and minuses. A building with limited electronics, automation, robotics, that's good for labor. A building equipment that's robotic, that's bad for labor. It replaces it. But the government still wants to incentivize efficient production. So they have that maker's acceleration, which allows you to get more cash back quickly. And so that's why they go about incentivizing capital projects and allowing a faster depreciation. However, under both systems, you're going to get to 100% depreciation, and it will catch up in later periods. Throw the poll out there. If you do not have any questions, click no. If you click yes, please type in the chat that you have questions. Hopefully you can see the poll. I don't see any votes yet. Okay. All right, so just type in here, type in the chat that you have no question or your question. That way, when I go back and look at the chat, I know people weren't sleeping at the wheel. Okay, and give another 10 seconds there for people to find the chat. Okay, so now I'm going to move forward. All right, so this first one falls into that first type, paid less than the fair value. So what people notice here is that there's a couple different ways to do this mathematically, and it's just your preference in terms of how you want to do it. There's a couple different ways. So one way is to take the purchase price, $350,000, and divide it by the market value or the fair value, 380,000. Now, yeah, have to give me a second here. I got to pull up the calculator. And I usually skip all the zeros. So 350 divided by 380. And I'm not gonna carry all the numbers in here, but I'm going to use them in my calculator. So we may have some rounding differences if you're typing along. Somebody asked where the 380 is from, and that's a good question. I'm sorry. That's the 210,000 and the 170,000. So essentially, if you were to buy these separate, or if they were to appraise them, that's the value they would have. So the fair value 380,000 is, is 170,000 for land plus 210,000 for building. Good question. All right, so the equals 0.92105. Now, if I want to find out my value for either of these and how I'm going to book it, I take my building and its fair value is 210,000, and I multiply it by my rate 92105. Now again, if you do the Zoe, behave. If you multiply that by the 0.9105, you get 193,421. If we did the same for the land fair value, 170,000 times the 0.92105. Give me 1 second. I got about 30 windows open with Zoom. I get 156, 579. And so if we added that, Zoe, cut it out. $579, we should end up with 350,000. Now the textbook takes you through a slightly different way, and you can use whatever you prefer. The textbook looks at total, sorry, give me 1 second. Total fair value. And so that's the 170. Give me 1 second, I'll get to that question. And the 210,000, and that equals 380,000. Okay. Yes, this is the packet on Blackboard. And so this is located in your, should be in the course content. And then within course content, it should be the class notes. And then within the class notes, AC 211, chapter 6. Zoe, get down. Come on. Down. Over here. Come on. Come on. Over here. Everybody say hi to Ragamuffin. You behave. No barking. All right. 12 pounds of terror. All right. So you come up with your total fair value, and then you take and figure out your fraction of that total. So I'm just truncating the zeros here. And so we have 170,000 divided by the 380. And that comes out approximately to 0.447. Again, I'm rounding here, but I'm not rounding with my calculator. And then you would multiply that by what you paid, 350,000. And that should give us the same number. So we multiply by 350,000, and we get 156,579. Same thing with our approach. 210 divided by 380. Remember, these are in thousands. And clear that out. That comes out to 553 approximately, times what you paid. And it'll be 193,421. So essentially, this gives us the historical cost in our accounting records. Oh, I heard a mic. Anybody have a question? I'm going to try that polling again. Let's see how that works. If you don't have a question, click no. If you have a question, click yes. If you have a question and you've clicked yes, please type in your question in the chat. And if you clicked yes initially, but you don't have a question, go back and click no. So that I don't think that I'm missing something. So I got 3 people that have questions. Okay, good. How do we go back to the poll? If it disappeared, don't worry about it. If you hit yes by mistake and you just you meant to say no, just type no in the chat. And I'll know, but I got 2 people now that had questions. So please ask them, because I definitely don't know what you're thinking, and it's much harder to read your faces online, especially when you're dark and scary. Nobody has their microphone on. By the way, I imagine your cat is there when you don't have your microphone on. Okay, I'm going to go ahead and stop the poll. All right, if there's any questions, I'll keep an eye on the chat. Otherwise, I'm going to be moving forward. Okay. So I would like you all to try number 2 using the information that I gave you. And what I'd like you to do is just type in your answer for factory number 2 in the chat. And I'll give you about 2 minutes to do that. So just do number 3. While we do that, I'll let you look at my majestic mutt. Hey, Zozo. You got everything under control out there? You telling people to get off your lawn? What's going on? Uh-oh. Who's out there? Do you want to sing to the people? Are you excited? Who's that? Doggy entertainment. I had a professor when I was at UMass that used to bring his dog into the classroom in his office. If you want to type it to me privately, that's fine. If you're nervous, you can type it to the whole class because they probably don't know. But you can use the same logic and the same formula from the first question that we did. I've only got 2 people that responded so far. Good job, AK. CV, it's not quite correct. Check, you're doing factory number 2. So the question 6.2, part 3. Close, MB. A little bit high. Good job, MC. I should see some more answers now. JP, pretty low. RM, a little high on yours. MB, high. NC, perfect. NM, a little bit low, but close. EK, you're good. JJ, you are low. EM, you're good. RS, you are good. All right. So again, we'll go with kind of the way that I find easiest. And we have our purchase price is 800,000. Our appraised values are 1 million. So if we take our purchase price and divide it by our appraised values, we get 800 divided by 1,000. Again, I'm truncating the zeros, and that's 80% or 0.8. So if we want to find the values up here, we just multiply by 0.8. 0.8 times 0.8. So the one we were looking for was part B, and that's 480,000. This one would be 240,000 and 80,000. Someone asked where I got the million from. If you just add up the appraised values, the 100, the 300, the 600, you get 1 million. Okay. So that's our answer for 2. Okay, let's jump down now and jump into number 3. Company owns an asset with historical cost of 75,000, estimated useful life of 10 years, and the salvage value of 5,000. That would help us for depreciation, but it tells us it has accumulated depreciation of 49,000 after adjustment. Essentially, that tells us that it's up to date. Zoe, shush. Shush. Now, what's extraneous information here is the company still owes 20,000 in liabilities on it. Now, it doesn't matter for us to come up with the book value. So if you'll remember, book value equals the historical cost less accumulated depreciation. All right. So if we take the calculation, we have historical cost, and that equals 75,000. Accumulated depreciation equals 49,000. And so our book value equals 26,000. Okay, pretty straightforward with that one. Okay, now the next one is asking for the depreciation expense reported on the income statement. So we go back to our formula. We have units of production. We have the historical cost minus our salvage value divided by the total expected or predicted units. And so for this one, we have historical cost of 24,000. We have salvage value of 2,000. And so our numerator equals 22,000. Our denominator, 200,000 units. And so we have 22,000 divided by 200,000. Quick math. And that equals 0.11 per mile. Okay. It says that we went 50,000 times 0.11, and so that equals 5,500. And so our answer is C. Now the other way that you could have done this is you could have done the numerator multiplied by the percentage of use. And so if we wanted to come up with the percentage of use, that would equal 50,000 divided by 200,000, which would equal 0.25. 22,000 times 0.25 would also equal 5,500. So there's two ways to get through that as well. So I'll throw up the poll again. Remember, if you don't have any questions, click no. If you have questions, click yes, and type in the chat your question. I should have 25 people respond here so that I know your cat isn't watching me. Okay, I'm going to go ahead and end that poll. I'm going to share the results. And I didn't have any questions, so I'm going to stop sharing them. Going to close that. And I'm going to ask, that's basically it for today. I have office hours after this class from about 5 minutes after 1, and I'll go till about 10 minutes of 2 just to give me time for a little break before my class. If anybody has any questions, please let me know. Otherwise, you are free to go. Thank you. Have a great day, and I'll see you on Wednesday. So the Chapter 6 quiz will be due Wednesday before class. I should be able to get it up tonight about 6 p.m. You'll just need a 15-minute block between now and Wednesday before class. And then the classwork, I couldn't get it into Pearson, so I have to do that, but it won't be until the 5th of April. Keep in mind the extra credit, though, is due on the 4th of April. So pay attention to those dates. It'll be due on Sunday. I think the 5th is a Sunday. You're welcome.